Good morning, everyone. Happy Saturday. Hope y'all are doing fantastic this weekend. I hope you have some wonderful plans instead of staring at the markets all day. Because honestly, there's really not a whole lot going on. This chop has been going about for the last almost 24 hours now. Okay. I would probably say that it may continue on a little bit longer, but I think a decision point is going to be made soon. Okay, so today's video, folks, is going to be public, and I want to share my thoughts on the short-term and the long-term views of Bitcoin, exactly what's happening in terms of the sentiment, what we're seeing, from other people around the space talking about, and what I personally see in the markets that's happening that I've seen, in other markets. Okay, whether you want to look at this as potential cycles or a bubble popping. I want to go through all of that today and give you guys a good perspective of where we are and where I think we're going. All right. So first things first, on the 15-minute chart right here, okay, you can see right here what I mean by nothing going on. I mean, there's literally nothing going on. You're basically moving sideways between, I want to say like 1%. All right. So you can see right here, like there's a 1% move to either side. If I keep moving this, up and down, you can see right there, less than a 1% move. So not a whole lot of money to be made in this kind of chop. All right. But if we start going out on the larger time frames, we see that there's basically been a continuation down from this rejection right here at 8,800. All we've really done is every time the prices come back up, price goes down farther. Price comes back up, goes down farther. Bear flags right there, goes down farther. Bear flags, pushes up a little bit, stops out some people on some short positions, and then goes back down. Okay, but all of that is sort of tightening up and coming to a resolution point. And what do I mean by resolution points? Okay, so first you need to understand the anatomy of a falling wedge. This is a falling wedge. Okay, these are typically bullish patterns. So what happens is there's a pretty deep sell-off that starts off and triggers the process of a falling wedge. Okay, and the volume at the beginning of the falling wedge is typically higher than at the end. The end is typically where the consolidation happens, and more often than not, you'll see a reversal out of the falling wedge. Now, again, I'll explain to you how the structure forms of a falling wedge. So typically you get something like this, a big move down from the bears, and the bears say, hey, I'm going to sell a lot. Okay, and the bulls say, okay, well, whatever you're selling, we're going to buy. And then the bulls try to regain control, but then the bears again say, hey, I'm going to keep selling. And then the bulls again say, well, we're going to keep buying. And then the bears again say, hey, I'm going to keep selling. The bulls say, we're going to buy. Sell, buy. Okay, then what happens is typically the bears at some point have nothing to sell and they don't have a lot to sell. And this is where you reach that sort of apex of the falling wedge. And you get to a decision point where the bulls are now getting to the point where they're in control and they're saying that, well, we've basically bought up everything that you have. Now we're going to wait and see if you have anything else to sell up here. Okay? And they're just going to keep pressing up and up because the bulls' intention is to keep driving the prices up, right? They're not in the game of losing money down here because their job is to buy all this and then hopefully push the prices up so that their asset appreciates. Okay, this is why you see the falling wedge happening, and this is why then you see a decline in volume, because what's happening is the bulls keep selling, the bears keep selling, the bulls keep buying, and then eventually price reaches the apex, right? And the selling wears out, and then the buying increases, and this is where you start seeing an increase in volume as the price pushes out of the falling wedge. And that's sort of visible right now, as you can see. Okay, now understandably so that this is a falling wedge in this particular time frame, in this pattern right here, but what we're also looking at is something like this, which is a larger parallel channel at play. Now there's a couple of different ways to draw this parallel channel. You can draw it like this. Okay, so I'm going to draw it like this to show you guys and illustrate that this is one of the ways to look at the parallel channel. All right, but I'm going to also choose to show you guys another way. So first things first, one thing that we know about the parallel channel, this trading range that we want to call it, is basically we've been hovering between $8,800 and down to about $7,700. So right around a good $1,000 range. All right. Now, more often than not, these particular trading ranges, once a sell-off has triggered, like from way up here, all right, are bearish continuation rectangles. Okay, and I pulled that up for y'all so you can Google it. You can just type in bearish rectangles. Okay, typically what happens is you'll get a sell-off like this, right? You'll move sideways. This zone right here is called a redistribution zone before, you know, more potential falling prices. Okay, so this is kind of what's happening right in this area right here, and that, at least that's what I think. Okay, and that's also kind of what the technicals are saying right now, right? We haven't been able to break out the falling wedge. The demand volume actually has been going down overall. So while this is a falling wedge, right, what I see in this is a good opportunity to sell the bounce, not buy the bounce, sell the bounce. So what you should be looking into is potentially shorting if prices get up here. Okay, again, not financial advice. This is what I would be looking at. Why? Because this is a perfect technicals pattern to be able to want to short this as prices trend back up. Okay, because again, this is a very typical bearish rectangle. You can see right there, fall, sideways, drop, fall, sideways, drop, right? So this right here is almost anatomically, in terms of structure, perfect right here. Now there's another way to draw this, okay, and this is where I'm going to show you guys a little trick. Okay, so then you pull this down. Let's just say this is the trading range. This was a false breakout up here, and then prices again came back down into this trading range. Okay, yeah, I can make the argument, you know, that that's it. We can even pull this down even a little bit more right there, so it fills in some of those wicks in this particular area. This was a false breakout right there, false breakouts, all of this is false breakout, and then push down. Now, where have we seen something like this? Okay, let me show you guys some magic. Here it is, way back over here. All right, this was your big trading range all between July and all the way till September, till we dropped off. All right, this was your false breakout. Most of this was your trading range. Why do we know that? Because you can see that was support right there, support right there. Then once it finally broke down, it uses as resistance, resistance. This thing came back up, used it as support, support, and then broke back down, resistance, resistance, and then finally broke through. Okay, it's almost, in my opinion, similar to the structure right here. Okay, these structures don't just form in fractal-like manners for no reason. There is a purpose of this. The purpose is that this is a distribution process. See, smart money and institutions do not operate like you and I do. Okay, they have a lot of asset to sell. They have a lot of asset to buy. And to do that, it takes sometimes days, weeks, or months. Okay, this right here, as I've stated before in many of my videos, was a distribution process. All right, and most people didn't realize this because they were looking for higher prices way up here, you know, around 14,000, 20,000, whatever, right? And I'll be honest, okay, I want to show you guys where I was wrong too. This is my video from August 7th, okay, and I stated that we were actually over here. I want to show you guys the beginning of this video just a little bit. We were somewhere over here. Actually, let me pull this up. Let me just show you guys on the chart where we were, okay? So August 7th, we were right over here, all right? And what happened was when I started seeing this turn around, this is where I started to slowly flip my mind. Now, any person at this particular point, if I was looking at this chart right here and all I saw was this, okay? If that's all I saw, I would actually think that that's a continuation pattern too. Why? Because we're about to basically try to flag under resistance and then try to push back up. But then this happened, right? All these candles started printing. And by the time we came back over here, middle of August, then I start to become a bear, okay? I definitely was not. I'll be honest. I was a bull all through here, all through the beginning of August. In the middle of August, and by the beginning of September, I was definitely a bear, because I then started seeing this descending triangle form, and people were in denial of that descending triangle till the very end, and they actually still are. Okay, so the mark of a good trader and someone who actually reasons with the market is he or she has the ability to be able to look at a market and adapt to it, not just sort of hold and marry one direction of a position. Okay. Now, wouldn't it be really silly if we had broken down all the way over here and I'm still saying that, hey, we have to go back up to 20,000? That would be ridiculous, right? I actually wouldn't want you to listen to me, and I wouldn't listen to me, because that would be a lie. But there's still people out there who keep calling and saying that this is the end. Well, this is not the end, okay? Again, in my personal opinion, this cannot be the end, because you don't break the 200 moving average like this so violently, and then you consolidate under the 200 moving average, not above it, under it, and then you're basically creating lower and lower highs, okay? And you're still stuck in this deep, parallel channel that you're seeing right here, right? So this is not the sign of a potential reversal, okay? And this is where I started to flip my view, and I talked about this right here. This is where I started to become short, okay? I took a lot of short positions up here, sold off too early. Those are the pretentious, posers, and the professionals will take their money very happily, right? So like I said, I'm shorting the market, and I'm pretty sure these people are going to feel the pain very soon, okay? So as you can see with that video, all right, you can watch this again, Bitcoin Boils of Frogs. Today's video is a part 2 of Bitcoin Boils of Frogs, all right? Because I want to sort of, go off of what I spoke about in this particular video. Again, you can go watch it on our Cryptosomniac channel. If you're not subscribed, hit the subscribe button, okay? So today's video is sort of a continuation of that, right? And I wanted to talk about why this particular trading range is basically nothing what we saw, or something very similar to what we saw up here, all right? And we're doing almost the same thing. This is really a bearish distribution channel to me, right? And so people are, again, still bullish, and they still think that prices are going to go back up to 9,500 or 10,000 the next week or two. And there was another tweet by a very famous technician. His name is John Bollinger. I'm sure you guys have heard of him. He created the Bollinger Bands, and he said there's a good potential for a head fake in Bitcoin. Wait for it, right? And then he posted this chart. And the crazy thing about all this is, what I read this as, there's going to be a head fake to the upside and then push down. So basically, if you're not familiar with head fakes, it's really a fake out in one direction, and the price resumes back in the other direction, okay? So most sane people would say, well, okay, the market has already been falling, so much. I mean, the momentum is really on the bearish side, right? So the head fake would be like this and then push back down. But what most people read this as, because they're ultra bulls and they don't want to, sound bearish at all, is they will read this as, oh, looks like we're going to fake out down here and then we'll go back up. See, that was the craziest thing to me, because, if you read some of these comments down here, or if you look at some of other groups that are posting, John Bollinger's analysis, they read it as, oh, well, Mr. Bollinger said that we're going to have a head fake and then we're going to push down with a head fake and then push back up. That's crazy. That's just crazy reasoning. All right, because I don't know how you can sort of say that we've already hit, $7,700. There's very little support left way over here. I mean, one big support, I guess you can make the argument, is this region right here between 7.6 and 7.4, which is really where, we pushed up and out of, right? We came back over here, pushed up, came back to that same area. Let me see if I can make that bigger. Way back here in June and May, right? So yes, you can make the argument that we're going to come back to the 7.6, 7.4 region and then push back up again. But again, this was on an uptrend. Okay, this was a support forming on an uptrend for another move up. This wasn't, this coming after a 3-month distribution way up here and another potential 1-month distribution. All right, so you don't just kind of distribute asset right above key support only to come down another 4 or 5% and then push back up. It just doesn't seem logical to me. Is it possible? Yeah, it's very possible. But if that was the case, why wouldn't this be very quick and sharp drop right here, distribute here, and then just push back up? Why take so much time to distribute right above the support? Well, I think because this support eventually gets weaker and weaker. The longer you spend time here, the less people think that 7.6 and 7.4 is going to hold. So this support, the orders here are going to get weaker. Okay, this is really the mark of how distribution happens. It's not even just the idea of asset being sold here. It's the idea of creating that fear, creating that sentiment in the market, saying that we're going to go lower and lower, and then the kick off the edge is just much easier to go down, because you don't have too many orders down here holding price up. And so you're probably wondering, well, why is there distribution happening and why do prices have to go down? Well, because I think there's a lot of negative press coming around Bitcoin, as well as if you watch my previous video of the Bitcoin boils the frogs, we talk about a potential global recession coming around. Maybe even not a recession, let's just say a slowing down of economies, right? Globally, that is. And I think to some extent that will, feed off into Bitcoin. Why? Because I don't think Bitcoin is an asset that is removed from the idea of what will happen to other assets. I think Bitcoin will probably follow other assets, and it's basically already following other assets, right? Gold has slowed down. The United States stock market has been hitting the 3,000 ceiling of the S&P 500. Nasdaq has started to create lower highs. So is Dow Jones. There's a lot of impeachment talks around the U.S. for our president. There's just a lot going on in the U.S. And other assets around the world, or other economies around the world, that talk about a potential recession coming around. And so I really don't think Bitcoin is going to be exempt from that. And so you want to have distribution to be able to, sell off your asset at good prices before, you create this sort of panic and fear in the market where prices really just dump and collapse. And then, smart money then has to sell assets way down here. So remember that smart money is only going to be successful if they sell off their asset to you at higher prices, and then they rebuy it from you at even lower prices. Okay. So with that being said, again, I still think prices are going to go lower. All right. Now there's another thing I want to talk about, and this is something that I've mentioned months ago. Okay. So I did this chart, let's see, I don't know when I did this. I think somewhere around this area right here. Okay. And I have a, as you can see, it's called the bull versus bear case right here, done on TradingView June 23rd. Okay. That's basically just before this top happened right here. Okay. This monthly top. And I did this chart because I wanted to illustrate that most people are so fixated at this particular point that prices are going to go up, that it was almost undeniably going to go down. Okay, and I did this chart again. If you look back over here, all right, the top of this happened on June 26th. Okay, June 26th right there. And I did this chart June 23rd, right about there. Let's see, June 23rd. Okay. So the reason I did this chart is because I started to feel the same FOMO that I felt in, the run up in 2017, way up here, that ultra euphoria that people are talking about, 20,000 or 40,000 and everyone's going to be rich. And, your local cabbie or your, barber is now telling you to buy Bitcoin, right? That's where this happens right here. And then this happens, which is distribution. Because remember that, although retail doesn't drive markets up, they help finish off the markets at the top, okay? Because you need smart money to be able to distribute asset into the FOMO of retail. Smart money doesn't, hold on to sell up here. They've already started selling from here all the way up here and then this sideways, okay? Because they need months of, accumulation or that euphoria feeling to be able to distribute the asset to retail, okay? And so I did this chart because I wanted to explain to you guys, exactly what I was seeing in the markets. And I did a bull and bear case, and I'll go over those Elliott wave counts in a second. But I also mentioned, in many of my videos, and even now, that if you look at history, right, history doesn't repeat itself. I get that, but it does rhyme in some way or another. Okay, so here's gold. In the 2010, it topped at around like $180 or $1,800, whichever way you want to look at it. And then it had its big capitulation, which is the bubble popping, right? So around 2016 or so, it hit its low around $95 or so, and then came back up to about 130, and then again retested about 78.6% of this entire move between 95 and 130. Okay, that's gold. All right. The Nikkei, which is the Tokyo Stock Exchange, same thing, huge bubble, right, in the 80s. Basically started popping, took about 2 decades for the bubble to pop, capitulation in 2003, hit a low, and again, a smaller bubble was created, went from a low of about 7,500 to about 18,000 points, retested that entire move, okay, and not even the entire move, it actually went a little bit lower, okay, so this is the Tokyo Stock Exchange. Now, that is sort of what I was seeing right here, which was, everyone was talking about the counts that we aren't even in the end of the fifth. Well, this is what I was thinking was, I think we did finish off 5. I think we were doing, this A, B, C right here. We finished off that white count right there. And then we were starting, potentially this new white count, which is, 1, 2, 3, 4, 5. Okay. But notice how I put this 2. I'm going to move this away for a second so it's a bit more clear. Notice how I put this 2 right here. It's right around about $5,700, $5,800. All right. And I want to show you guys exactly why I put that there. Okay. So I'm going to draw this from that top to the recent top, or that bottom at around 3,100 to the recent top that we had. Okay. So my 2 wave is around 62.90, which is about a 70.5 retrace between the 3,100 bottom and the 13,900 top. Why did I do that? Okay, well, historically, Bitcoin likes to come down to pretty deep retracements when it's had, these wild sort of FOMO-like, movements right here. Okay, so if we do a fib from this bottom of that market to this top, right, that the price of Bitcoin came down all the way down here. So that's about I want to say 85% or something ridiculous. Yeah, so you can see 85%. So from this bottom, which is about $170 in 2015 January, to this top around December 2017, we retraced 85% of this entire move. Okay, so that should tell you something that, at the very least, Bitcoin from this bottom to this top will retrace 70.5%, or if we're going to follow that same formula of 85%, all right, where should Bitcoin retrace? Well, it should retrace to about $4,700. Okay, now this is where things get interesting. Why 4,700? Is that even possible? Okay, here's where 4,700 comes out to. Okay, this particular area right here. So once we broke out of this reaccumulation down here, or accumulation, notice we went up here, right? Had another period of accumulation between the area of, between the area of $5,600 and about $4,700 to $4,800. Now, isn't that interesting? The bottom of this is $4,700. Okay, so this is the first point of accumulation before that massive push up. All right, and so that's why you have to wonder and think that could this two wave come as deep as that, $4,700 or maybe $5,000 range? I think it's possible, right? Bitcoin has done it before, and I think it could do it again. So we could be in this white count, all right? Alternatively, okay, and this is where, let me see if I can, let me see if I can bring that other count back. There it is. There it is. Okay. So there's that other count. All right. I'm going to delete this one. And so people are wondering that, okay, what if we did finish 1, 2, 3, 4, 5? And what if we're now still in the A, B, and C? I think that's also possible, but I thought that was kind of unlikely. And the reason I say it's unlikely is because we haven't quite broken this, pre-accumulation area or this, low of about $4,700, $4,800 before that big thrust up. So I can't definitively say that we are not in this area. When we start heading towards 4,000, then I will be more inclined to say, okay, then we could be in this black count right here, which is A right here, B was that big sort of false push up, and then C will probably come down to this previous resistance right here in 2013, which was about $1,300. Now that I know that sounds very far-fetched, but it is possible. Okay, markets have done that before, right? Like I just showed you earlier, the Tokyo Stock Exchange, went deeper and swept those lows, and it went to almost down to about 6,500 points, right? Instead of this low, which was about 7,500. So it went 1,000 points deeper. So it is possible, right? But is it likely? At least not yet, right? So for now, all I can say is, there's a higher chance that we are still in this 1, 2 count, and the 2 count right here, the 2 wave, is still being played out. We still have maybe another month or 2 to go. Typically, December, January are good months for Bitcoin to start new cycles. So we'll have to wait and see exactly what happens. All right. Let's see. We talked about boiling the frogs. We talked about this Elliott wave count. Oh yeah, another thing, obviously this whole thing happened with Poloniex, where Circle, which was the Goldman Sachs subsidiary, pulled out of Poloniex, and and now it's not available in the U.S. And this is actually happening a lot in the space where the United States the regulatory body is really pressuring exchanges across the world, like BitMEX and Binance and KuCoin, and Poloniex now, and they're saying that, hey, we don't want our U.S. customers to be allowed on your exchange, and if we find out they are, you're kind of screwed. And this also happened with the whole Bitfinex Tether debacle a couple months ago, right? So basically what you're seeing is, that the government and the regulatory bodies around the world, especially the US, putting the hammer down on crypto. And that is now reflecting in the prices right here. There's no surprise that this whole distribution up here happened well before, bad news like this with Poloniex and Bitfinex Tether, started coming about. But that doesn't mean that Bitcoin then has to go to zero. It just has to then come around to a new process of price discovery down here and figure out, okay, when can we talk again with the regulatory body? When can we talk with the government and figure out when this asset is, better of an investment? All right. For now, institutions do not want to be caught in a regulatory battle between the government and these exchanges, okay? Because, again, companies like Grayscale and Binance and Bitfinex and BitMEX, they deal heavily with U.S. customers because the United States, by and large, drives the volume in the crypto markets. I mean, that's not even a question, okay? A lot of the money, especially futures money, comes from the U.S. So if you stop that money flow, you're going to wreak some havoc on this market. So I think institutions were already slowly seeing that, and they started to exit their positions well before this happened. Okay, so you got to be able to read what's happening in the market in terms of sentiment and things that could be going wrong. And the way you do that is by understanding the technicals, right? And like I've said before, knowing when to shift from a bull to a bear is by far one of the most important things that you can do. The worst thing you can do is, hold on to your typical mindset of, being an ultra bull or ultra bear, right? Even, being an ultra bear down here, all the way up here and missing this run because you think that, Bitcoin has to go lower from here was dumb too. That's just as dumb as being a bull even now, right? So you could see that, it goes both ways, right? So you have to be able to adapt and be malleable with the market. It's kind of like Bruce Lee says, right? You got to flow with the water, be the water. And so the markets are the same, okay? Let me see if I can look up anything else. I wanted to talk about some altcoins that I was looking at. I had looked at Link, like I stated, to most folks in my community. I said that, this particular area could be a good bounce right here, but you want to be selling off in this region right here because all this that was support will now become resistance. And that's exactly what happened, as you can see. And sometimes, folks, reading markets isn't all that hard. You just have to get away from the thinking of, I think this will happen, versus thinking that what is happening, which is what, the charts are showing you, right? And so once you sort of make that mindset shift, then you go from being an okay trader to being a very successful one, okay? So Link, nothing going on in Link. I personally don't think Link is going to go anywhere anytime soon. LTC is the one that I've got my eye on, and I want you guys to check this out too, because what's happening right here, from what I see, is potentially an accumulation process. And I think this may last maybe another, 15 to 30 days, because it kind of looks like this, okay? It looks like this. What happened was, this sideways accumulation, there's going to be a push up right here. This is going to be your fake out up here, and then you're going to take out those lows right here, and then push back up. So most markets, when they go through accumulations, they have to stop out both directions in the positions, because this is how you accumulate more liquidity. You push up, get people to FOMO, have those same people sell down here, and have these people who bought here set their stops under this region and sell right here too. This way you collect enough liquidity in this area, and then you have the ability to drive the market up easier, okay? At the end of the day, folks, when markets are in sort of this stagnant stage where crypto really doesn't have an interest right now in terms of retail, what you're really looking for is pockets of liquidity. Where can you, sort of inflict the most pain, collect the most asset, and then drive the market in the direction that is favorable to your position as, a professional trader, or as a bot, or as an algorithm. And this is how, you can read the market successfully, okay? Again, if you don't know this stuff, please come join Cryptosomniac. We have an amazing community. Every day in our community, folks, I love to sort of give an analysis of what's happening through the day. I also do night updates for our, folks in Europe and Africa and Asia. Just because I know that sometimes it's tough to know what's going on, because I'm doing this video in the morning, right? By the time you watch it or you wake up, this video is about 7-8 hours late, right? So I like to do these videos twice a day. And, most communities don't even do a video a day. I do 2 videos every day, okay? You can see right there, night update, all right, and a morning update. Okay, and I do this for mostly my analysis or my Advantage members. So, the video that you're seeing today is public, but I don't really do that many public videos because there's just too much noise on there, right? Most people don't really know what they're talking about, and they're criticizing me for moving back and forth in my positions, but they don't realize that to be successful, you have to be able to switch your mind, right? So anyway, So I talked about Litecoin, talked about Link, talked about BAT, I talked about Poloniex and my bull and bear case right here, as you can see. Again, you can go to Cryptosomniac Trading View. You can subscribe to our channel. You can even come join the free Discord. I'm going to have a Discord link in this YouTube video that you can click on and join. All right. And, you know, come join or buy our technical analysis course right here. Okay. And you will get access to all these locked channels that you see. Every single one of these locked channels has amazing information and tons of education right here too. So you can learn exactly what we're talking about, see what, you know, we're thinking about on a day-to-day basis. If you don't understand, ask questions because we are very helpful. All right. So thank you so much, folks, for watching this video. And again, subscribe, come join Cryptosomniac, hit the products page right there, and our Advantage membership is right there. Our technical analysis course is right there. And you can always message me when you join our Discord channel right here. My name is Amol, and thank you so much, and I'll see y'all soon. Have a great weekend.